Credit cards. Though credit cards and debit cards look nearly identical, they have 16-digit card numbers, expiration date, magnetic stripe, and chips. However, the way they function and the benefits they offer vary significantly. Credit cards give you access to a line of credit issued by a bank, while debit cards deduct money directly from your bank account. So, what is a credit card? A credit card is a financial tool issued by a bank or financial institution that allows you to borrow money up to a certain limit, called a credit limit, to pay for goods and service or even withdraw cash. Unlike a debit card, you are not using your own money. You are borrowing from the bank and agreeing to pay it back later. Here how it works. You make a purchase, then you swipe or tap your card at the terminal to buy something. The credit card company pays the merchant on your behalf. Next, you receive a monthly statement. Every month, you will get a statement showing what you have spent, your total balance, and the minimum payment due. Next, you repay the bank, where you can pay in full. You owe no interest. You can pay partially. You will be charged interest on the remaining balance, or you may pay the minimum. You'll stay in good standing, but interest builds up. Regarding interest charges, if you don't pay in full, interest is added to your balance. Key parties involved in credit card processing. Credit card processing involves multiple parties, each playing a specific role in approving, routing, and settling transactions. First, the card holder, or you, the person who owns and uses the credit card to make a purchase. You enters credit card details or swipes or taps the card at the point of sale. Second, the merchant or the business, the store, website, or service providing, selling a product or service. It accepts credit card payments through a payment terminal or online gateway. 3. Merchant's bank, or the acquiring bank, or the acquirer, is the bank or financial institution that provides the merchant with the ability to accept card payments. It receives the payment authorization request. It sends it to the correct payment network for processing. 4. Payment processor. This is a third-party company such as Stripe, Square, PayPal, WorldPay that handles the technical side of processing the card transaction. It connects the merchant to the acquiring bank and payment networks. It ensures secure communication of transaction data. 5. Card networks or card association. For example, Visa, MasterCard, American Express, Discover. This is the networks that sets rules and standards for card use. It routes transaction information between the acquiring and issuing banks. It helps facilitate authorization, clearing, and settlement. 6. Cardholder's bank, or the issuing bank, or simply the issuer. is the bank that issued the credit card to the cardholder. It approves or declines the transaction based on available credit, fraud checks, and account status. Here is step-by-step life cycle of your card transaction. First step is authorization. The cardholder initiates the transaction by swiping, tapping, or entering card details at the merchant's terminal. The merchant sends the transaction request to the acquirer, that is, the merchant's bank. The acquirer forwards the request to the card network, such as Visa, MasterCard, American Express. These facilitate communication between issuer and acquirer. The card network routes the request to the issuer, that is, the cardholder's bank that issued the card. Then the issuer checks is the card valid, is there enough credit or balance, is there any sign of fraud. Now, if the transaction is approved, an authorization code is sent back through the chain to the merchant. Thus, the transaction is now authorized but not yet settled. During the authorization step, the issuing bank sets aside the transaction amount from the cardholder's available credit or balance, but doesn't yet transfer the funds to the merchant. This is known as an authorization hold. It ensures the cardholder has enough funds. It is a clever mechanism used by banks and merchants to temporarily reserve funds before the transaction is finalized. The amount is frozen and unavailable for other purchases. No money moves until the merchant submits the transaction for settlement. Next is the authentication step. During checkout, you might be asked to verify your identity via a passport, SMS code, or biometric scan or app notification before the transaction is approved. So, after entering your card info, you are prompted to verify your identity. This may be with a one-time password, OTP, or fingerprint scan before the transaction is approved. Next step is clearing transactions, where the merchant batches all authorized transactions, typically at the end of the day. These batches are sent to the acquirer, who forwards them to the card network. Then the card network sends the transaction details to the issuer for final review. Here, the issuer responds. The issuer sends back an approval or decline via the card network to the acquirer, then to the merchant's point of sale. For debit cards, funds are reserved, that is, not yet moved, in your account. For credit card, the amount is added to your outstanding balance. Next step is settlement, where issuer transfers the funds to the card network. The card network passes funds to the acquirer. Then the acquirer deposits money into the merchant's account. Now, for debit card, the hold on your account is converted into an actual withdrawal. For credit card, the amount stays in your credit account until you pay your bill.